let me introduce myself. My name is Putri Veronica, from Management Class 22A, with NPM 224111040. Taxpayer reporting and tax audits. Taxpayer reporting and tax audits are integral components of any taxation system. They ensure that taxpayers fulfill their obligations and that governments collect the necessary revenue to provide public services. Both processes play a critical role in maintaining transparency, fairness, and compliance within the tax system. Below is an in-depth explanation of taxpayer reporting and tax audits, highlighting their importance and how they operate. Taxpayer reporting. Taxpayer reporting, also known as tax filing, is the process by which individuals and businesses report their income, deductions, credits, and taxes owed to the government. Every taxpayer is required to submit a tax return on a regular basis, typically annually, although some types of businesses may be required to file quarterly or monthly returns, especially for taxes such as value-added tax, VAT, or sales tax. The primary obligation in taxpayer reporting is to provide accurate and complete information. Individuals must declare their earnings from various sources, such as salaries, investments, and any side income. Businesses must report their profits, expenses, and other relevant financial data. The tax return allows the government to assess how much tax is due and whether the taxpayer is entitled to any refunds. Taxpayers also have a responsibility to keep records of their income and expenses. For individuals, this might include wage slips, bank statements, and receipts for deductible expenses such as medical costs or charitable donations. For businesses, proper accounting records, including invoices, purchase orders, and payroll reports, must be maintained. Accurate record keeping is essential because it supports the figures reported on the tax return and can be crucial in case of an audit. Most countries have deadlines by which taxpayers must submit their returns. Late filing can result in penalties and, in some cases, additional interest on any unpaid taxes. Many tax authorities now offer electronic filing, e-filing, options, which streamline the process and reduce the chances of errors. E-filing systems often come with built-in error-checking features and provide immediate confirmation of receipt, making the filing process more efficient. One of the benefits of taxpayer reporting is that it allows taxpayers to claim deductions, credits, and refunds. Deductions reduce taxable income, credits directly reduce the amount of tax owed, and refunds occur when a taxpayer has paid more in tax during the year than is required. Proper reporting ensures that taxpayers receive any benefits they are entitled to while fulfilling their legal obligations. Tax audits. A tax audit is an examination of a taxpayer's financial records and tax returns by the tax authorities to ensure that the information provided is accurate and that all applicable taxes have been paid. Audits are a key mechanism for maintaining tax compliance and detecting underreporting, tax evasion, or fraudulent claims. Audits can be triggered in several ways. In some cases, tax authorities may conduct random audits, selecting a small percentage of taxpayers at random for examination. However, audits are more commonly triggered by red flags in the tax return, such as unusually high deductions, discrepancies between reported income and third-party information, like employer reports, or patterns that suggest potential underreporting. Advanced analytics and data matching systems allow tax authorities to detect anomalies that may indicate non-compliance. There are different types of audits, ranging from relatively simple to more in-depth examinations. A correspondence audit is the least intrusive, where tax authorities request additional documentation or clarification on specific items through mail or email. For example, if a taxpayer claims a large charitable donation deduction, the tax authority may request proof, such as receipts from the charitable organization. A field audit is more extensive and typically involves tax auditors visiting the taxpayer's business or home to review records. This type of audit may occur when there are significant discrepancies or when a business has complex transactions that need further investigation. During a field audit, auditors may examine books, bank statements, contracts, and other financial documents to verify the accuracy of the tax return. Another common type of audit is the office audit, where the taxpayer is asked to meet with tax authorities at their office to present documentation or answer questions about specific aspects of their return. This is more involved than a correspondence audit but less intrusive than a field audit. Rights and responsibilities. During an audit, taxpayers have rights during the audit process to ensure they are treated fairly and within the confines of the law. First and foremost, they have the right to representation. Taxpayers can hire tax professionals, such as accountants or lawyers, to represent them during the audit. This ensures that the taxpayer's rights are protected and that the audit is handled correctly. Taxpayers also have the right to clarity regarding the purpose and scope of the audit. Tax authorities are required to explain why the taxpayer's return is being audited and which documents are needed for review. Transparency in this process helps ensure that audits are conducted in a fair and systematic manner. Additionally, taxpayers have the right to appeal audit findings if they disagree with the outcome. If the tax authorities determine that additional taxes are owed, the taxpayer can dispute the results through an appeals process, which may involve a hearing or further examination of the case by a higher authority. This right to appeal is critical to ensuring that taxpayers are not unfairly burdened by errors or misunderstandings during the audit. However, taxpayers also have responsibilities during an audit. The most important responsibility is to provide the requested documentation in a timely and accurate manner.